Alright, y'all, today I want to go over some trading strategies that I use to trade with the trend and that I use to trade counter trend. Now, if you followed this channel for a while, or if you're new, then you don't know this, but I'm the kind of person where I like to get into swing trades and then scalp the counter trend. So, for example, I entered a long right down here. In fact, this trade, let's see, where's that? Right here. So 44.1. I'm still currently in this trade. Right, so I entered right down here at about 44.1, but what I've done along the way up is I've taken little scalps, right? I took a little scalp here, I took a little scalp here, I took a little scalp here, and then I'm actually short from up here, and this short has actually now become more of a swing trade, and I'm short from up there. This trade is up about right now 64%. You can see my entry is at 49.9. I'm also still in this trade. So right up here at about 49.9, where's that? Right about here. Okay, so I'm short from here, and while we have been coming down, I've been taking the longs on the way up. In fact, I've taken 3 longs during this downtrend, and so what I want to do is kind of show you, and some of those longs that I've taken in the downtrend are right here. So I took one of the longs right here from about 49K. That one was actually a trade that I had in my Discord here, potential Bitcoin trade setups in my Discord. You can see that a few days ago I actually posted this setup before it happened, as we were coming down to that important level of 49K. And so that was a trade that I actually did take when we came down to 49K right here. You see we get a big bounce to the upside. And then earlier today, I also posted a trade setup in my Discord where I told everybody, you know, basically I'm long right down here. Yeah, I'm long right here, and then that trade did very well as well. So I've been scalping the counter trend while we're coming down in this larger move down. And what I want to do today is I want to show you guys the different strategies that I use to do this. And there's a few strategies, and this is going to be more of an educational video, but these are the 3 strategies I think are great for people, especially if you're newer to trading, especially if you don't know too much technical analysis yet. I think these strategies can be very advantageous for people, because if you just stick to trading these strategies and don't overcomplicate things and don't overtrade, I think you can actually have a lot of success quite early on. So the first strategy I want to talk about, which is actually the easiest one to use, especially if you're new to using Market Cipher or just trading in general. Of course, all these strategies involve using the indicator Market Cipher. By the way, there is a $500 discount in the description of this video for the first 50 people to use that discount code. You can get $500 off the lifetime membership for Market Cipher. Also, guys, if you enjoy this kind of content, please like the video, subscribe to the channel. It really helps out the algorithms. But the first strategy is the 4-hour, 24-minute strategy. This strategy only works for trending markets, okay? What I mean by that is it only works in a very strong uptrend or a very strong downtrend. So if you see yourself in the middle of these uptrends where we just get these massive moves up and these small consolidation, massive move up, small consolidation, massive move up, consolidation, massive move up, then you can actually implement this strategy. And the opposite is true. If you see we're in a strong downtrend, you can also implement this strategy. The way the 4-hour, 24-minute strategy works is you're going to split your screen into 2, okay? On the right side, you're going to put on the 4-hour time frame, and on the left side, you're going to put on the 24-minute time frame, okay? And let me just go ahead and turn off all these things here. I've got a whole bunch of things on the chart that I don't want on. Okay, there we go. Yeah, so one of the time frames on the right is going to be the 4-hour. The other time frame on the left is going to be the 24-minute. And what you are going to do is, quite simply, you are going to look for the 4-hour time frame to print a trigger wave, okay? A trigger wave on Market Cipher B. And if anybody is unfamiliar with what exactly a trigger wave is basically when Market Cipher B on the 4-hour prints a green dot that's consecutively higher than the dot to the left of it. So we could look at this as an anchor wave. This is a big old fat bottom here. And any dot that prints to the right of this big old bottom now becomes a trigger wave. Okay, it now becomes a trigger wave. And this could even be considered a trigger wave down here, because if we look, it's still technically higher. Okay, it doesn't lose its trigger wave status until we print a wave that comes down lower than that first wave down here most of the time. Okay, I am oversimplifying it for the sake of this, but but really for the most of what we need to know, basically, if there's a wave that's printed and you look to the left and you see a lower wave, you can consider that indeed a trigger wave. Okay, so when you see a green trigger wave printing, meaning you're getting a green dot on market cipher B, okay, you're going to go ahead and take note of that. And then you're going to go to your 24-minute time frame. And on your 24-minute time frame, what you're going to do is, soon as that green trigger wave starts printing, you don't have to wait for it to confirm, guys. You do not have to wait for it to confirm. But what you're going to do is you are going to wait for either one of two things, okay? You're going to wait for one of two things. Either you are going to wait for a green trigger wave on the 24-minute. Now, okay, let's keep in mind that the 4-hour candle starts printing when we are right here. Okay, so I'm going to draw a vertical line here. So when that 4-hour green dot starts printing, we are currently right here on our 24-minute time frame. Okay, you are going to enter the trade when the 24-minute gives you either a money flow crossing from below the zero line to above the zero line. So this purple wave down here turning blue, that's when you will enter. Or you're going to enter on the first green dot that the 24-minute gives you. Okay, so let's just go back and back test this strategy for a little bit here. We got our trigger wave here on the 4-hour, and then we get a money flow crossover right here on this candle right here. That's the first time we get that money flow crossover confirming, right? And from this point onwards, we could have entered a nice long trade that would have gotten us a really juicy 6.41%. Okay, then we're going to go on to the next instance where this would work, which would be right here. We've got a trigger wave printing right here. Boom. Hang on, I want a vertical line, and I'm going to come to my 24-minute time frame. And okay, so it starts printing right here is when it starts, and we can see that we get the money flow crossover literally right here on this candle is the first one that confirms right here. And again, we could have entered the trade. We would have been in this trade for about 5 hours, guys, but we would have made close to 3%. Okay, 3%. Now, this can also work. It's a little bit more confusing here, but if you're in an uptrend and the 4-hour time frame prints something called a bearish divergence, a bearish divergence is where the price makes a higher high, and yet the momentum makes a lower high. If you see this happening, the bearish divergence, then you can actually use this strategy during an uptrend in reverse to get a really nice short. So we're printing right here a red trigger wave because we had our red anchor wave up here. We can see these are all trigger waves. We don't consider entering a short this way in an uptrend unless we get a bearish divergence on the 4-hour time frame. This is very important, y'all. Unless you actually get a bearish divergence on the 4-hour time frame, you do not want to use this strategy in an uptrend, okay, to short. In an uptrend, you only want to long using this strategy unless you get a bearish divergence on the 4-hour. In a downtrend, you only want to use this strategy to short unless you get a bullish divergence on the 4-hour. So we get the bearish divergence here. We print our red trigger wave right here. I'll put a vertical line, and then we'll come over to our 24-minute time frame. And let's take a look at what happens as we're printing that wave. What we're going to do is we're either going to enter the short on the first red dot or the first money flow crossing under the zero line. So our first red dot is coming in right here. Okay, right here on this candle. We would have entered the short right here. And we could have made a nice 3.24% profit on that trade. And we close out that short, right? And then we actually come to a green trigger wave right here. So we close out the short, we get to a green trigger wave on the 4-hour. We get our money flow crossing over on the 24-minute right here. We enter a long position, and Look at this. Look at that. 3% profit right there, right? And then, what do you know? We get another bearish divergence on the 4-hour time frame. We can see price coming up, getting higher. We can see the momentum coming down, getting lower. And we've got this red trigger wave right here. Okay, right about here. And so this is where the red trigger wave starts to print, right here. And then we get our first red dot right here at this candle. And then we can enter a short, and we can short that thing down about, let's see. I mean, we could have really been, honestly, we could have really stayed in this short and stayed in this short for quite some time and made, you know, about almost 7% profit. And then look at this, guys. You know, we're shorting it down. While we're shorting it down, we could actually stay in this swing short, because as we're in this swing short, what do you know? We're printing a green trigger wave on the 4-hour right here. Right here, literally right here. So we could stay in this swing short, and then we could enter a long trade right here. Boom. And this trade would have gotten us, we could have squeezed out of this, you know, 0.69%, which it is not a bad scalp, right? It's not a bad scalp. Potentially, let's say that this trade was a loss, right? Let's potentially just say that this trade was a loss. So, okay, either a break even or a loss, not a big deal. Out of all these winning trades we've had, one of them is not so great. But then we get this other green trigger wave right here on the 4-hour. And this would be our entry right here on this candle. And look at this, guys. Look at this juicy long. Just by using this simple strategy, 11%. 11%. This strategy has a very high win rate, especially if you're using it to long in an uptrend or short in a downtrend, right? It actually works really well to short in a downtrend. If we take a look at the what was happening back in, you know, May, when we were crashing down in that very powerful downtrend, you could have done the exact opposite. Wait for a red trigger wave and then enter on either a red dot on the 24-minute or a money flow cross under on the 24-minute. In fact, really, just to go back and show you guys this, let's go back to May. This is March, April, May. Look at this, guys. Literally every single time. Okay, here we are. Yeah. Every time we get this red trigger wave right here, you know, as soon as we get the red dot in the 24-minute, look at these juicy shorts, guys. Okay, so we wouldn't have really known we were in a downtrend until maybe like here, right? Until maybe here, we wouldn't have known we were in the downtrend. It's official, right after we get these two huge dumps. And then let's just say it took us some time to know we were in a downtrend. This would have been our first red trigger wave when we know we're in the downtrend, right? And our entry would have actually been right here on this candle right here. Boom. And look at the short, guys. I mean, seriously, look at this short. It's just massive, right? Just massive. We would have stayed in this thing for a long time. We would have made lots of profit over, wow, you know, just by using this strategy, guys. You really look at this, 40%. And then notice what happens here in the downtrend. We actually get a bullish divergence now on the 4-hour time frame, right? We get the bullish divergence right here. We're printing this dot. We actually are printing a green dot right here as well. And so look, in the downtrend, if you're getting the bullish divergence, then you can use it to enter a little scalp long. And this would have kept us in the trade for about 4 hours, making a good 7%. And then, you know, again, we get the red trigger wave on the 4-hour time frame. We get the money cross under right here. This was the first candle. And again, we enter a short right there, and we're coming down another 12% move. And then look, we get the bullish divergence on the 4-hour, which is telling us now we start to look to use this strategy to long. We would have entered right here on this candle right here. And, you know, we could have made a really nice 11%. So this is one strategy that's really good for beginners. It's called the 424 strategy. Now I want to show you guys a strategy that you can use to find those huge pumps before they happen. Okay, those huge pumps before they happen. It seems like a lot of people get frustrated that they miss the pumps. It seems that Bitcoin, when it pumps, it really pumps, and people miss it, like this right here. They're like, man, look at this crazy pump. It's just pumping up. And then people are like, all right, I'm going to long now. Maybe we'll get another pump. And it's like, right. And then it crashes, and they lose interest. And then, boom, we get a pump out of nowhere. And people are like, what the heck? So this next strategy is actually called the hidden regular strategy. This is really going to help you find those pumps. And actually, guys, I'm going to have to split this video up into multiple sections. So I'll deal with these things in a separate video. But the second strategy is called the hidden regular strategy. And what this basically is, guys, is you're going to split up your screen again. And on one side, you're going to go ahead and put on the 1 hour time frame. And on the second side, you're going to go ahead and put on the 6 minute time frame. Okay? And if anybody's caught on by now, basically what I'm doing and what I found is if you take a time frame and you divide the higher time frame number of minutes by 10, you will have two time frames that work very, very well together. What I mean by that is this. I had the 4 hour time frame. This is actually the 240 minute time frame, right? 6 times 4 is 24. 60 times 4 is 240. You divide 240 by 10 and you get 24. That's why we use the 4 hour and 24 minute time frame. People always ask, hey Jay, why are you using random time frames like the 24 minute and the 6 minute? There's a reason, guys. The reason is because when you divide it by 10, they have very synergistic properties where you will be able to get really good entries like what I just showed you on the 4 hour 24 minute strategy. Now this strategy I'm about to show you is a trading strategy that I use often to find those pumps before they happen. So if we come back to my Discord here and we go to the Ethereum and the Bitcoin, I guess, charts here, but we can see I entered a small low leverage long right here simply because of this setup here where we had a hidden bullish divergence for Ethereum. And a lot of times, guys, you will notice that if a big pump is going to happen in a trend, right, in an uptrend, like let's say we're already in an uptrend, which we have been for a long time, we can see here, if we zoom out, that it's very clear that we've been in an uptrend. An uptrend is characterized by higher highs and higher lows, right? Price is going up like this, up and then down a little, and then up a lot, and then down a little, and then up a lot, and then down a little, and then up a lot, and then down a little, then up a lot, and then down a little. This is an uptrend. And what tends to happen in an uptrend, you'll notice, is just that we come up a lot and down a little, and then up a lot and then down a little. So the hidden regular strategy in a trend will help you identify the bottoms of these pullbacks in the trend so that you can long the lowest point of that pullback in the uptrend and then catch those massive pumps. Okay, the way we're going to do this is we're going to look for a hidden bullish divergence on the 1 hour time frame, and then we are going to look for a regular divergence on the 6 minute time frame. Okay, so that first trade, that Ethereum trade, I also posted a Bitcoin trade setup in my Discord. By the way, guys, you can get into this Discord by going to patreon.com/Jason Casper, where I post lots of technical analysis in here for Bitcoin, Ethereum, XRP, Cardano, lots of different things. I forget exactly when I posted that setup, but it was, I think, 2 weeks ago. Here it is, right here. Okay? Entering along right here, because we had this massive hidden bullish divergence. Okay? So a hidden bullish divergence is this. A hidden bullish divergence is if you ever see momentum coming down, printing a lower low, and price is coming up, making a higher low. This is called a hidden bullish divergence. This is a continuation pattern. This is telling you we have come to the bottom of one of those pullbacks and we're about to get another massive pump. Okay, look at what happens after we print this hidden bullish divergence. I'm going to make the 1 hour bigger here. I'm going to zoom in a little bit. Let me zoom in here so that we can really see this. But look at what's happening here. Okay, price is in fact trading along this trend line. It's making a higher low. Okay, again, we come up a lot and then down a little, and then up a lot and then down and then up, right? That's what an uptrend is characterized by. So if you see over time that price, and you're going to look at the lows here, you're going to look at these low peaks. What you want to look for is when you see price coming down to a bottom, and you can tell it's coming to a bottom because market Cipher B is going to be printing one of these green dots, right? These green dots mean we're coming to a bottom. Just take a look at the screen here and see that every time market Cipher B is printing one of these green dots, it means we've come to a bottom and then we're about to move up. And every time we print a red dot, it means we've come to a top and we're about to come down. So we can use these green dots on market Cipher to tell us we've come to a bottom. Okay, we've come to a bottom. And if you see momentum printing a lower wave over time, where you can draw a trend line connecting one green dot to another green dot, okay, they don't have to have these big old BitBoy dots here, okay, these big green dots popularized by BitBoy when he did his market Cipher video back in January. You know, they don't have to only have these big dots. These make it much more powerful, right? If you see a big dot underneath the whole oscillator, and then you see another big dot underneath the whole oscillator, and you have a hidden bullish divergence, that is powerful. It doesn't have to be though, but that is super powerful. And so when you see the hidden divergence forming, you are going to then go to, all right, I'm going to put a vertical line there. You're going to go to that 6-minute time frame, okay, and you are going to go back in time. Well, no, you're not going to have to go back in time because it's in the present. It's in the present as it's happening. But for our sake, we have to go back in time. You're going to go back in time, and what you're going to look for on the 6-minute time frame, okay, is you are going to look for a regular bullish divergence, okay, a regular bullish divergence on the 6-minute time frame. A regular bullish divergence is where price is making a lower low while momentum is making a higher low, okay? Now check this out right here. As we are printing our big old green dot here, okay, on the 1 hour, we start printing it right here, okay? We start printing it right here. Now, if you just enter on the big old green dot in the 1 hour, what happens? You come up a little and then you get stopped out, right? So what we want to wait to see is we want to see a very clear bullish divergence on the 6-minute. And right here, I don't know if you guys can see this, but we actually do see price coming down, momentum coming up. It's very small and hard to see here, but indeed we can see this very clear upward movement of the momentum wave on the 6-minute, right, while we have the price coming down. And you can zoom out a little to maybe the 3-minute time frame. Hang on. Sorry, guys. Let's see. That was August 12th. Here we come. Yeah, you're going to be looking at the 6-minute, but if you have to, you can go down to the 3-minute, because the 3-minute is really just the 6-minute more zoomed in. But look at what happens here, guys. Really, look what happens as the price is coming down right here. Okay, remember this is after the dot starts to print. Okay, after the dot starts to print, the green dot starts to print on the 1 hour. We get the regular divergence here, and that's where we get the massive pump. So you would have entered right here on this candle, and really this strategy lets you long the bottom, right? You're literally longing the bottom right here, and this would have been a massive move. Okay, this would have been, if we just come up to the top of that candle, we're talking about a 10% move. Now remember, we got in this same trade using the 4-hour 24-minute strategy when we just back tested a little while ago. We didn't even get into the trade until somewhere up here. So we're talking an extra using this strategy, an extra like 3%, right? That's a lot, especially if you're using leverage. Okay, now these trades are not going to happen all the time, guys. They're absolutely not going to happen all the time. But also, we could see the other day we took a really nice trade in here because we were getting a hidden divergence. Again, we could see it right here as we were coming down to this, right? Momentum is coming down. Price is printing a higher high momentum is printing a lower high, okay? And we've got that going on right about here. We come over to our 6-minute time frame, and oh, hang on, this one should be the hour. This one should be the 6-minute. That was August 21st. No, wait, August 19th. We'll go back to August 19th. What do we see there? Okay, so we start to print our divergence right about here. Okay, now, yeah, look at this, guys. We see right here. Okay, so this is I'm sorry, this is actually not a regular bullish divergence right here. It's not a regular bullish divergence, but there's two ways we can do this, okay? First of all, we always want to see the hidden divergence. Okay? Then we can either see a regular divergence or just anchor, trigger, trigger. Okay? What I mean by that is this. Right here, we can see very clearly that we printed a bottom, and then we printed a trigger wave, and then we printed another trigger wave, and we get the money flow crossing over. So really, there's two ways you can look to enter. Either you would want to see, and I'm going to show you an instance where we actually get the regular div. Either you want to see price coming lower like this while momentum comes higher like this, or it's perfectly okay to enter the trade if you simply see that hidden divergence on the 1 hour, and then you see something like this on Market Cipher B, where very clear direction coming up with money flow curving up to the upside. And I would recommend entering that trade on the money flow crossover, like right on the money flow crossover, which would have you enter right on this candle right here. And then this is a massive move to the upside right here. Okay, so again, you can either use this strategy, the first example I showed you, where we're looking for a regular bullish divergence after the hidden divergence, or even if we don't have a regular divergence, if you just see we get an initial bounce and then we get a retrace, and we keep retracing back, and we see momentum coming up, we see money flow starting to cross. When you see that money flow cross after the hidden divergence, that is a powerful thing, guys. When you see the money flow cross after a hidden divergence, that is a powerful thing. So either be looking for, first of all, we always look for the hidden div. After the hidden divergence, we want to see a regular divergence or anchor, trigger, trigger with money flow cross, okay? This strategy is a little bit more complicated, right? But you can see it will give you much more better, is that right? Much more better entries? I don't know. All right, y'all. So those are the two strategies I want to go over in this video. In the next video, I will be doing more strategies on different ways to find good trade setups. If you found this video helpful, please like the video. Please subscribe to the channel. Share this channel on all your social media networks, you know, TikToks and Bookface, Twattermeister, Elon Musk, and all that. Yeah, subscribe, share, like, hit the bell, all the stuff I'm supposed to say as a YouTuber. All right, guys. Appreciate you. May God bless all of you. In the name of Yeshua, Jesus, the Messiah, I do pray all y'all are blessed, and I'll see y'all in the next video. Peace!